Good morning, investors and traders. So, this is the first and foremost YouTube video I just made. So, myself, Shourabh Bonik, I am a full time investor and trader. Obviously, investing in the Indian capital markets since my college days from 2019 onwards. So, here I'll tell you that the earnings season, it means Q2 earnings season, is just started. And it's going as well, so it's in the mid stage. So here are a lot of companies are posted their earnings, starting it from nifty 50 to nifty 500 to nifty 750 all caps, and BSE all caps, and BSE kind of all listed companies. It's around 5,000 to 6,000, all about the listed companies there are in NSE and BSEs as well. So here many of the investors asking their questions, sir, there are a lot of companies are posted their results. How do I filter basically to get the best companies? So which has posted a good results and which has a massive tailwinds to grow further their revenues as well as their earnings as well. It means PAT, that is profit after tax. We'll discuss later about these terms, that's revenue, PAT, as I said you, and margins also. So whereas the matter that is considered here, what are the things that we need to look whenever we are just seeing a earnings of a company or seeing a results of a company. So first of all, you have to see for revenue accelerations. It's definitely for Q1Q purpose, that is quarter on quarter, and then year on year. So year on year company how much grows its revenue as well as on a quarter on quarter basis. So after seeing the quarter on quarter and year on year revenue growth, you have to look for margins. It means operating profit and operating profits margin. So first of all, what is operating profit? So operating profit are those things, that's those profits which actually company extracted from their revenues after all the expenses like cost of goods sold and SG&S kind of expenses, they just deducted from their revenues, and then they got the operating profit. So after the operating profit, they get their that is called PBT, that is profit before tax. What are the tax the company needs to pay? So before that, whatever the profit that is actually extracted, so that is known as PBT, that is profit after tax. So after paying the tax, that's how much tax is company paid for running their functions, running their operations in the said industry or in the said sector. So they got the PAT, that is profit after tax. So that is PAT, we all know. So PAT, when it is divided by the number of shares that is outstanding on the books of the company, so then we got the EPS, that is called earnings per share, कि पर एक शेयर में कंपनी का अर्निंग्स कितना है. इसका मतलब है एक शेयर में कंपनी का कितना पैसा कमाया है आउट ऑफ इट्स प्रॉफिट आफ्टर टैक्स, दैट इज पैट. So that's how we have to look into the income statement. So starting it from revenue and end it to PAT, and then when it's ended to PAT, then we have to move it to EPS, that is earnings per share. So earnings per share tells us how much profit a company is made or how much earnings a company has derived in that particular quarter per share. They are just outstanding or they are just leading in the equity markets or in the capital markets as well, you can say so. So you have to look for, as I said, revenue growth, then operating profit growth year on year and quarter both. So in some companies you may ask, sir, quarter on quarter profit has increased but year on year profit is decreased. So in that case, what do we need to do? So in reverse or vice versa things can also happen, that year on year profit is increased but quarter on quarter profit has decreased. So in that case, what we'll need to do with the company, then we'll discuss it later on any other videos as well. So today's for discussion is how to look at the quarterly earnings of a company. So for looking the quarterly earnings, you have to see all the things these are accelerating or not. Whenever you are seeing these are accelerating, whenever you are seeing this is increasing, then you can see or you can consider it the company is doing something different, or the company is doing something based on the current market scenarios, that is prospering. So the prospering things can actually put some lights on the revenue front or the margin fronts and also the PAT fronts of the companies. So for this reason, you have to look for revenues, operating profit, then PBT, that is profit before tax, and then PAT, finally PAT, that is profit after tax. And out of this PAT, that EPS is also seen. See, in such cases the PAT is when increasing, the EPS growth you may need to see. But in cases of companies are doing a lot of corporate actions, then their number of shares are actually increases. In case of bonuses and splits, we'll discuss later also this in any other videos. So in that sense, what we most need to rely for is how the PAT is increases. It means PAT is the actual earnings of the company, कि company कितना पैसा कमा रहा है. So when the company's PAT is increases, then the earnings per share will definitely follow if the number of shares actually remain intact in that case actually. So these are the things that we need to look into company's earnings, earnings Q2 which is actually running nowadays. So revenue, then I said profit after tax, then I said operating profit, then PBT, profit before tax, and then profit after tax, and then EPS. So these are all accelerating or not. You just first need to filter the companies based on these parameters. These are the things, that revenue, operating profit, and profit after tax, that is PAT, and then earnings per share, that is EPS. All these increases or not. Whenever you are seeing these all are increases, then you can consider this company is doing something different. This company is doing something significant. For that reason, their revenues are increasing quarter on quarter basis and QoQ basis, year on year basis. So for today's video only, I just describe why you need to see the Q2 or any quarters earnings call or earnings of a company, and how you need to see it, and what are the things that you need to see it. So in next videos or any videos, we will discuss about what is operating profit margins, what is net profit margins, and why we need to look for the operating profit margins and net profit margins in a company, and why these margins expansions or margins are actually important for a company to run further. And for these reasons, their share price accelerations is actually playing out in such cases. So these are the most needed and most relied parameters to see in a company whenever you are studying a companies, because companies earnings are actually the main driver of the stock price accelerations of the company. So basic things in a market, we all know we are here for earning based on the earnings based on the stock prices. If the stock price is moving up, we are just getting our earnings. If the stock price is not moving, it is consolidating or it is remain intact as it was a few quarters back. So there is nothing much as you can say called satisfying or much happiness is actually seen in the marketing to be as well. So we must see the earnings growth first. So for these reasons, these are the parameters that you look when whenever you are studying a Q2 or whatever the quarters earnings or whatever the revenues that is posted by the companies. So that's all for today's video. We'll discuss later about the things that I said, that's margin expansions and why margins are important for a company to look into. So thanks for being here with me today. We'll discuss later. Okay, good day and happy investing.